Alright, so for today, instead of yapping about what I usually yap about, and instead of, yapping about random things, I will yap about something interesting and useful for you. If you are someone who wants to invest in the stock market but finds it too overwhelming, wants to put money in the stock market but is too scared, and wants to trade but doesn't know how to, this video is for you. So now you cannot make any excuses because right after this video, you can go and start investing. Step 1, you create a demat account. Don't bother with what a demat account is. It's called a dematerialization account, which is basically your trading account. For you to invest in the stock market, you need this. How do you do that? You download a securities trading app from your app store or play store. Now, your bank can have one, like HDFC has an HDFC securities trading app. ICICI Bank has its own securities app. But if your bank is shit and does not have one, you can always download an independent app like Zerodha, Grow, Upstocks. You know the ads that come on TV. Step 2, you select a Nifty 50 mutual fund. Now, I'm saying Nifty 50, you can even select a Nifty 100 mutual fund. And if you want to know what that is, it's basically the 50 largest companies in the Nifty index. The index is where all the companies in the stock market are listed, and Nifty is one of the indices in India. So you select one Nifty 50 mutual funds. There are hundreds out there. You can select any one, it doesn't matter because they are all managing the same portfolio. Okay? Portfolio is the stocks that are in Nifty 50. Alright? So once you select the mutual fund, you want to do what is called an SIP, systematic investment plan, which is you put money into it every single month. But how do you do that? You create a mandate. So a mandate is basically giving the app permission to take that set amount every single month from your account, right? So say you put 500 bucks. Now don't tell me you can't put 500 bucks. Like that's a lot less than how much you spend on cigarettes, alcohol, and partying, or whatever it is you spend on. So you set an amount, could be 500, could be 500,000, depends on how much daddy gives you every single month. And second, you set the interval. Now, do you want to put this amount every month, every 3 months, every 4 months, or every half a year, or every year? You set an interval. I'd say every month is good, but if you cannot afford that, if you don't want to do it every month, every quarter, which is every 4 months, is also good. Step 3, you track progress. And this is not to say you open your fucking trading app every day and see, oh, I made a 5 rupee loss, or oh, I made a 3 rupee profit. No, that doesn't matter. You're not in it for the everyday profit or everyday loss. You're in it for the long term so you can go to Hawaii with your wife without quitting your job or without doing whatever you want it is. Alright? So don't track progress every day. Maybe once a month when you put the SIP amount again, you see how it is doing. Now, if it's doing bad, do not worry because Nifty 50 is a long term thing and you're in it for the long term. Second, have patience. Like I said, SIP is not a short term thing. A systematic investment plan is to reap long term benefits. I'm not sure if Albert Einstein has said this, but he called compounding the eighth wonder of the world. Compounding is what you're doing with the SIP. You put money every month without taking it out. So Nifty, when it grows and grows and grows, the amount you put keeps growing with it as well. Now, to really reap the benefits of compounding, you must have patience. Even if the market crashes, you do not worry. You have patience and you wait. Now, I know what you're thinking. This guy's out here to destroy all of my wealth and he's telling some sort of scam or whatever. I don't know what you're thinking, right? Now, if that is what you're thinking, I know this is just the beginning. This is just to get the ball rolling so you understand how the market works. You get the habit of compounding, you get the habit of investing regularly. Because eventually, once you start earning more, you want to put in more. And once you start putting in more, you should have an understanding of what you're putting, where you're putting. Even if you have an investment advisor or a financial consultant, right? You need to know what he's doing. He will show you the stars and moons and everything, saying, oh my god, you should put your money here. It's amazing. But you should know, is it really amazing? Is it amazing for you? It might be amazing, but is it amazing for you? Is that what you want? Does it align with your family goals? If not, that is not amazing for you. So, this is just the beginning, just to get the ball rolling, just for you to reap the benefits of compounding. Because now, if you're in your early 20s or teens, this is the best time to start compounding. There's no better time. Well, a good time would have been when you were born, but that's obviously not possible. So, this is a really good time. So, in the words of the famous Ellie Goulding, what are you waiting for? The video is done. Go download the app and start investing.